Hi guys, thanks for tuning in to another episode of Nuggets News. Today we welcome a special guest from a company in Australia that have begun using XRP and some of the Ripple technology in their products. So I was very keen to have Nicholas on today. He's one of the founders of a company called FlashFX. So thanks for joining us today, Nicholas.
Good
So I guess I
morning.
want to
Thanks for
start off
having
and
me.
get a bit of your background about what you guys do at FlashFX, the history behind it, and then we'll get into the crypto side of things.
Yeah, thanks. My name is Nicholas Nygram, one of the co-founder at FlashFX, and we started with the company wanting to, improve how international payments were made. Find a different pathway than to just, invent using the old traditional Swift rails. We've started very early in the piece looking at other cryptocurrencies, but very early on, before we sort of really started, we knew that Ripple, or we sort of always believed in the Ripple story, that would really make the difference for us. And like we've for now sort of been engaging with Ripple itself for the past 4 years. They helped us establish the company when we were going through the licensing process. Ripple was part of that, had to, appear with ASIC, trying to explain, what we're doing, how we're doing it. Our initial product that we launched in January 17 was, built on RCL, built with IOUs. We had two partners in Europe who were able to make US dollars and euro payments. And that's sort of where it grew from. And only retrospectively, we introduced or implemented traditional FX liquidity through Swift rails. We always wanted to engage or expand the reach we have on Ripple with different currencies and countries. The solution we had was not sort of scalable, and many other payments providers were not able to implement or get to the same stage. And Ripple during this time then also sort of changed the tack and be more focused on larger institutions. So the use case to a certain degree has changed, but we throughout this stayed in touch, and only recently sort of officially been joining RippleNet with an X-current, previous X-current integration. We have started to launch a product into the Philippines on ODL, so on-demand liquidity. Very happy with that performance. And most recently done a second one using US dollars to Bitstamp, so slightly different use case. We're now engaged with a number of partners overseas who are on RippleNet. They can be a bank, they can be a payments processor, or another MSP who they either have flows into Australia that they seek our support, where we can do the local distribution, or for us where we want to send funds to that destination. A larger part will be on RippleNet. Just the rollout of ODL will take a bit more time, but as they become available and are official, then we always seek to leverage ODL. We started off with a pure B2C business, so consumers coming online. We then also had businesses that can use us to send payments overseas to family and friends, to pay bills in investment purpose, import exports, these kind of businesses. And most recently, we sort of expanded by offering APIs to our customers. So more and more, we also morphing into the space of offering our complete infrastructure to smaller banks, credit unions, neobanks, digital banks in Australia who seek to leverage what we have, which is currently a mix between more traditional FX payment platform, and more or increasing portion of that will be on Ripple. So that's sort of
Fantastic.
where we
Yeah,
are at
I
the
did
moment.
just want to rewind and maybe talk about, for people that aren't familiar with how FX and these payments work, a lot of people only see when you want to send money overseas, it takes a lot of time and it's a fairly high cost thing to do if you want to send smaller amounts. So before cryptocurrency and blockchain Ripple came along, what were those traditional rails? Can you give us a brief summary of that, and I guess the strengths and weaknesses of that system before we get into the improvements that these new ones offer?
Yeah, like the most prominent, like you walk into your bank branch and you fill out a form, or if you're lucky enough, you can do it online to do a SWIFT transfer, and you know that those funds have been sent. Consumer client in Australia is paying about 5% margin on the actual exchange rate. On top of that, say another $20 just to do the transfer. So that's a transaction fee. And then depending on the bank's processing ability, how sort of integrated that is, that can happen same day or next day. But from my previous role in one of a major Australian bank, that can take up to 5 days for a payment to be processed or sent. It will go through a number of correspondent banks until it reaches destination. So, for argument's sake, I'm making payment to a smaller bank in the US. So, this Australian bank wouldn't necessarily have a relationship with that bank. So, it will have, a Wells Fargo or JP Morgan or Bank of America as a correspondent bank to receive and process, and they will pass it on to that smaller bank until, at some point it lands in the recipient's bank account. So that's sort of the delay it's taking, and the fees. That's sort of how it's been for a long time. There was never really a need to change anything. The banks were happy with the process. They were making their fees, they're making their FX margin, and the time it took was kind of, that's just how it was. And I think the emergence of cryptocurrency or newer technologies is kind of, people think, well, does it really take 3 days for my funds to arrive in my bank accounts? Where the system has to change, and it has to change for international payments, with SWIFT, but equally it has to change for many local payment systems that are out there in the US with ACH. Many other countries have very slow payment processing. So in terms of how it was sent before, either it's gone through a SWIFT transfer, or a bank might have had a relationship with a bank overseas, and some of you might have heard of Nostro Vostro accounts. So there's an element of pre-funding where the funds, US dollars or whatever currency it is, has already been at the destination, literally waiting to be distributed. And banks would just hold these balances, have certain anticipation on what's being used on a daily, monthly, weekly basis, and then rebalance as they see fit, and hedge the currency risk, etc. So those two elements is sort of really how the world is operating now, and is a quite expensive
for sure. And we live in this digital world now where everything is instant, online, and we can transfer information around the internet, but we can't yet transfer value. So I think that's the big shake-up that everyone's excited about with different cryptocurrencies. With the pre-funding of the Nordstrom accounts that you just mentioned, what are the similarities and differences there to this on-demand liquidity? Because that's just something that the concept, I think, for some people is still hard to grasp. Are banks going to spend all this money just to have this liquidity pool versus these other options of, ideally being able to send to someone directly without having to have this offset of capital or this liquidity pool? Do you want to maybe walk us through how that all works?
Yeah, on one hand side, yes, people, they will still, Swift will always sort of be there to a certain degree. It will take time to really go through and having on-demand liquidity. But in essence, what it is, a customer of ours is giving us Australian dollars into our bank accounts. We're lucky enough to have the NPP, the new payments platform. We then have an integration with an Australian exchange who will give us liquidity in XRP. So maybe I should wind back. So when the customer makes a deposit and wants to send US dollars to the States, I'm just making that example, not saying that there is an ODL set up in the US, but they're looking to get a price from us in terms of what is the cost to convert Australian dollars to US dollars, and they will confirm the price and it will go through our engine. The Australian dollars will then be sent to that exchange, converted off ledger into XRP. Those XRP are then sent on ledger to the US exchange, and then immediately converted back into US dollars. And that operation only takes, number of seconds, less than a few minutes, to be in US dollars again at the other end, ready for distribution. Then it depends on the destination partner who is licensed and can make those payments to the ultimate end customer. So that's where we talk about the last mile. That's only as fast as the system allows us to make those payments. So a customer sending money to us on NPP can be immediate or almost real time. Same for us then to the exchange. We go through Ripple. That's sort of where we have the speed, where every ledger closes every 3 to 5 seconds. It's sent across. Then again at the US exchange, and off ledger question to those. So that's really, I don't need to have those US dollars with that partner in US. XRP is sort of that lubricant that sort of connects the two to bring value from A to B, and that's really the sort of the game changer where us as a payments provider or a bank doesn't necessarily need to hold all these balances. So in terms of unlocking value, not needing to manage this liquidity, checking if there's credit risk, there's market risk. There's so many different elements that a consumer or a client doesn't really know what is happening in background. So what we see now with RippleNet, it's people getting used to the concept of Ripple. Yes, if it's just a pure pre-funding setup, then it's just the message is going through and it's pre-funded. But I think there is, what we see now, a more, acceptance that, XRP as a digital asset, as a utility in that process from A to B really has value. It's not that overnight, the banks will jump on this. There's a risk appetite. There is a number of different things from a regulatory perspective that they can do. But I think, looking back the last 12, 18 months, it has improved, continuously. And I think that will keep happening.
Yeah, I guess what I'm hearing is that it really is cutting out that big chunk in the middle that's maybe the slowest part, the most expensive part. That is where the big difference is. If we can go from that A to B in XRP, there's still a little bit of friction with the first mile and the last mile. But as this develops and more people get on board, it's sounding to me like it might be like some sort of routing process where it'll be, do you guys have a bank with this customer who's got to go out to Commonwealth Bank? The US customer has a JP Morgan account. That payment provider on the other end has banks with all these people. And then the first mile and the last mile get quicker and more efficient. That's all right? Oh, cool.
Yeah. Look, I think that's really sort of where we've been, from the beginning, interested in Ripple and XRP. Initially the way we've used RCL, the Ripple technology with our first iteration was really, using the Ripple technology as a highway, to get value A to B, from A to B. We used IOUs, and more and more, ourselves, and with our integration, yes, we can leverage not just the technology itself, but using XRP as the vehicle to get it, from A to B.
With you mentioned before, with say Nordstrom and these other all these forex providers, they have to hedge their currency risk for what they're sitting on with their liquidity pools and whatnot. So at the moment, the relationship you just described with an exchange, for example, that's very beneficial to you. Are they looking to hedge that risk? If Ripple goes down 20% overnight or something like that, do you know what I mean? Like, are they taking a lot of that risk, and is that a relationship that they're happy with, or how does that relationship all work?
Look, most exchanges that are operating now on ODL, they have, what we call like an open market book. So they provide the platform, and then you have third-party market makers who have balances in XRP and make a market that will enable those payments to go through. So an exchange itself can, but doesn't have to take that crypto risk. From their point of view, I build the platform, I build the various coins that are out there, and then you have third-party providers, market makers, can be any person, any institutional person, or bank could potentially be a market maker on those exchanges. At the moment, yes, it's a more retail focused flow in terms of how the depth of those order books, but the more and more flow that is going through, and the steady it is, it will attract more of the institutional and larger flows, and banks to step in, and maybe at some point in the future there might be a more institutional type exchange that is used to support those payments.
That makes more sense. So there's not really just a pool of XRP tokens that are sitting there stagnant. It's more these order books that people are sort of dipping into for the liquidity. And if there's, I'm just picturing some examples here. If there's a lot of people sending from one country to another, everyone is buying XRP here to send it here. Obviously, we can use that Ripple net to send the XRP back. So you can sort of float these books and the liquidity that different people are dipping into in different regions.
Correct. These market makers, they're not just having their, balances on one exchange. So they, do multiple exchanges, and then they capture the flow and hedge themselves outside and rebalance, then on a daily basis to get it back to where it's used. For us, we use the flow, and it's the liquidity is there, and Ripple is actively engaging exchanges and market maker, who are willing to put up that liquidity, and it's all sort of a step by step. You can't just kind of say, well, we need the big bang to be an exchange. They want to see what flow is going through, how does it work, etc. So it's a learning by doing, a step by step, more flow going through, and then the market will naturally grow with more people stepping in. For us, yes, like a customer of ours who's making a simple payment, they're not taking any XRP view or XRP risk. For us, same thing. We can, or we are, but we're not necessarily, in a payment. If we send payments through ODL, I'm not taking any XRP risk. Even for the short periods, it is in XRP. That's all. There's no risk in there. So that's sort of all set up with the agreement we have with Ripple to make sure that the values we're sending and receive and convert at the other end is all matching. Are the banks seeing this as something that is a threat or something they want to adopt? Because I don't know the exact figures, but I take it that this is a highly profitable part of their business. Those margins on Forex, the international transfer fees,
is this going to save them money? Are they looking to adopt it, or are they thinking, oh, geez, if this system is widely implemented, this is going to be a big hit to our profits?
A bit of everything. It's yes, for most banks, international payments is highly profitable. It doesn't, unless you sort of look at those nostrils, it doesn't really affect the balance sheet. They want to change as well, but it's, there's so much legacy for most banks that they have to go through with their own banking system, that, the use of Ripple and, the speed of it, not all of them can really catch up and sort of connect, because it's a lot more and faster than what they can process themselves. So, they're interested, they're engaging, they're learning, and, they're not going to be a leader in leading that innovation, but maybe they're a fast follower.
I guess I'm picturing in my mind, it's funny that the crypto space it started off to replace the banks, and it is becoming more and more like a banking system. The way that I see it now, you can earn interest on your deposits and whatnot. But in an ideal world, you mentioned that you've partnered with the Bitstamps and Australian exchanges. In an ideal world, you'd be partnering with Kraken in Europe, Binance if they go into 180 countries. Ideally, you'd be able to tap all these different sources of liquidity as partners in all these different countries, and that's speeding up that biggest part of the international transfer.
No, I think that's right. Like you need an exchange. Most of the exchanges, because of the nature of the digital asset or crypto not being a regulated product, they can't actually make a payment to a third party. So they always need a payments provider at the destination who is licensed to receive and process those payments. And yes, it will take some time to set up and enable all those corridors. But then, on the corridors, you have, more than one exchange, maybe, more than one that flow to bring down the transaction cost. That's really where it's heading. The banks still heavily rely on their margins and transaction fees, and even like when we talk about Ripple being cheaper, etc. Yes, it will reduce the operational cost, but it doesn't necessarily automatically mean that you have to or will pass on those savings to your customers. Some do, some don't.
Yeah. I didn't quite catch what you said at the start there, where is it businesses and whatnot that won't do it directly? So for example, if a customer was tech savvy, I can send you XRP and you sell it if you're a US customer and you've got an exchange account. So you're saying that not everyone is going to be that tech savvy to have their own account and do this themselves? Or are you saying that some businesses won't do that because of the regulations and that sort of thing?
I'm not entirely sure which point you're trying to, like an Australian business
for
or
example,
Australian...
like we're an international business. We've got customers all over the globe, and they can send us XRP or Bitcoin directly. We don't need that first step, that first mile that you talk about, and then use crypto, and then the second mile. So is that what you were saying about more and more customers just aren't familiar enough with that tech to do that themselves yet, or it's the regulations and the other things that they want to use these payment providers for?
Yeah, for us, like when we, the reverse that we use with Bitstamp, we have Australian crypto clients, they might use their bank or someone else to convert to US dollars and make a deposit with Bitstamp and wait, 1 day, 2 days, 3 days, however long to that be received, to that be processed with the exchange. Whether with us, they can get their value in US dollars onto Bitstamp in a matter of a few minutes, and then they can go on and have that liquidity there in US dollars, so they're not taking any crypto risk, and then buy whatever they seek to. Same with you. Like you receive, Bitcoin or whatever it might be, and you then convert. You might take a view. So look, I hold on to that because you have a specific view on where it's going. or you send it to exchange and withdraw those Aussie back to your bank account. So there's a number of different use cases. Like we are a bit specific in that we've been pushing for that US dollar bid stamp on, because that's something we had in the beginning, and lots of, it's not a pure remittance flow, but it's, again, it comes back to what do people want to do, and if they get money, if they seek to have money from Australia into, pay their family or pay for an invoice, or, I want to buy crypto or a digital asset, then we can help them. So we look at XRP, or if clients come to us and buy XRP, it's kind of it's another currency. Through us they can buy XRP, and we deliver it to an exchange account directly on Ledger or their own Ripple wallets. If they choose to convert to US dollars and have that done on ODL, then we can deliver that to their Bitstamp account. If they, have US dollars but want to pay to their, Bank of America account, yeah, we'll just, yes, at the moment it's not on Ripple, it's not on ODL, it will go the long way. So it's just, but over time that will change. So we have a number of pathways that we can.
I was going to say, just in general, how have you found it all so far? What are the strengths and weaknesses, the pros and cons of the Ripple software and maybe XRP that you've found so far?
Yeah, it's been a huge learning curve for us in how we use the ledger, how we use technology, increasing the utility of XRP. In making payments, and we're still a strong believer that we want to use it more often. We want to expand the currencies and destinations we can reach with Ripple, and we're in the process to connect to more partners that equally want to use us for local distribution. If and when new corridors will come available on ODL, we then can integrate into those exchanges or payments provider. That is just, for the end user, it will just become more seamless and more immediate. Like we like the visibility of the transactions. We like the ability to track in terms of, like where exactly is the payment. All of those functions are not necessarily available on Swift. There is some mechanism now to more being able to track those payments, but it's just what Ripple has, the pressure that Ripple has put on in terms of what it can offer.
One question we get a lot of is about the regulation side of things. Can transactions be frozen or reversed if there's errors or misuse or whatnot? How does that side of the ledger work?
Yeah, look, the way we've been using it, like once a transaction going through either a conversion or a payment on RippleNet, the way we've been using it's irreversible. I'm not entirely sure, probably the wrong person, if a transaction can be blocked or if Ripple is able to do anything. I don't want to speculate and I don't want to go there, but for us, when a transaction is going through, it's gone through. We only send to customer work with customers that we connect to. So like if we send to a Bitstamp or something goes wrong, like I'm not sending it out in ether and don't know who the person is. We always have a partner we're working with, and if something gone wrong with this payment, or for our internal checks, there's a compliance check or an anti-money laundering issue. We can still stop these payments to go out because we're concerned, around that element, and we can bring it back. But the transaction has gone through, and it's not that I can cancel it. I can reverse it, do the other way around. But from the way we've been using it, it's irreversible.
That's good to know. I guess the final question I had just quickly is that there's a lot of speculation around XRP and the value in it, that it does need a. Do you think it does need a large market cap to provide all this liquidity, in my head, when we're doing a buy on one end and using that liquidity, the depth of the order books, every buy ends up being a sell on another order book. And as we spoke about before, there'll always be arbitrage of those order books globally. So it really, in my mind, the net demand is always zero. Every buy equals a sell on the other end. Is that right? Or do you think that there is going to be a need for large market cap for the liquidity?
Yes, I mean, having smaller, larger market cap, I think it comes with what is the value of that digital asset and how it's being used, and if it's used more broadly and frequently and more payments going through, then in my mind the value of that asset can increase. Like, I'm not making any speculation on what the right value is, or undervalued, overvalued, or it should be zero. Yes, like you have, I'm looking at the number of those projects, coins or ICOs out there, and the way I look at it is kind of, really, what is the utility? What is it trying to achieve? Does it really have a meaning? And with Ripple or with XRP, it's well defined. Getting value from A to B, and the more utility there is in the coin. And yes, you're right. If you sell, you buy XRP and you sell it again a few seconds later, that's the utility that we need. And with that, a lot of the speculation that's been in it, that more utility will come, and hence, because more utility, the price should be higher. Yes, I think there is other coins out there who have a lot broader investment focus. But really, what is it trying to achieve? Is it really has it changed? Has it really achieved anything? What is it really used for? And for a lot of them, I can't really tell, or they're not really achieving that in the same way as Ripple is doing, and doing it officially. Engaging with the market participants, with payments provider on the regulatory sides, making sure that there's other project or other people wanted to create their own coin or network, and I can sort of see that Ripple is on the right path. Change in such a big magnitude that we talk about with international payments and money flows will take time. It's not just a tap you can turn on and everyone is taking it. I think that's where your listeners sort of need to have a more long-term view, that what is the utility of Ripple, getting more clients onto RippleNet, what volume is going through and transactions. And I know that sort of that is being tracked, and we're on that pathway. Ripple is engaging with the regulatory bodies. There is more acceptance, more risk appetite by bank itself to have XRP on their books. Like, if you look who the early investors have been in Ripple, in the company itself, and I'm sure they through their investment have some form of XRP holding, that they that's sort of an insurance that they bought early on. It's kind of, look, I have it. If it really takes off, then at least I have a pool of funds, and others will eventually buy into that once the business is more comfortable in using that technology, once they have the regulatory certainty. And I'm not saying some are further advanced than others, and it will just it's a progressive path we're on. And you sort of you don't have to look the next quarter or the next year. It's sort of really a long-term aspect, that it's a step-by-step. It will take time to change. We're on the right path. FlashFX is one of many providers out there that believe in it, and more will come, and the utility will grow. yeah, that's
Yeah, no,
that's
I
the way
agree.
we
There's lots
see
of
it.
projects out there that don't have utility for sure in the crypto space. And I know, Nicholas, you're saying in pre-interviews and whatnot that you're not overly familiar with the Bitcoin, Ethereum, and other technologies. And I definitely think that, particularly with the focus on exchanges, and now these are integrating some of the Lightning networks on Bitcoin and other things, that I definitely agree that Ripple's made the best effort so far in terms of investment and whatnot in trying to get the first mile and the last mile, rather than just about who's got the best tech or exchanges doing whatnot. So I think that was just about everything that I wanted to get through today. Do you have any final thoughts for us?
No, look, I think it's good. We're glad to engage yourself and your listeners, and we are happy to receive any questions people have around, how FlashFX is using, Ripple or XRP. We have a number of customers that wanted to open up an account with us, and that's been interesting discussion. Like if someone is in the US and gone through the sign-up process with us, unfortunately, we can't really help a person in the US wanting to open up a bank account, because it doesn't sort of make sense for them to get value to us so they can, like Swift value to us so we can get it quickly onto Bitstamp. So, like at the moment, we only license really for Australian residents or citizens overseas with sort of an Australian bank account. We're not an exchange. Exchange usually sort of takes customers from, anywhere because they're not licensed. So, us being licensed with ASIC, has certain restrictions. And, even though it's great to get feedback and people try to sign up and use our value, I sort of have to kind of, what can we do for you? How do we really save you time and money and make it easier? And I understand in some destinations, it's harder to really access XRP liquidity, what choices you have. But it's hard to really, be the solution for in those markets.
Well, I've enjoyed that. We'll definitely have to catch up in future and see how it's all going and growing globally as well. But I'll put the links to follow you guys in the description below, and I hope you guys have enjoyed that chat today. So thanks for joining us, Nicholas. Cheers, guys.